Hey folks, this is Muhammad Harun Khatib from Suits. Suits is a team of hardworking finance enthusiasts. We have with us Umme Ruman, Manogna Aras, Navya, Nadeem, and Sheikh Ikramul Haq. We are here to give you Gyan. Today's objective is about four main things. First, what is cloud? Second, applications of cloud in finance. Third, advantages of cloud in finance. Fourth, case study.
What is cloud? The cloud refers to a software and services that run on the internet instead of locally on your computer. Most cloud service can be accessed through a web browser like Firefox or Google Chrome, and some companies offer dedicated mobile apps. Where in cloud, massive amount of data can be stored and the data will be stored in data centers or servers.
Deployment model. The cloud deployment model identifies the specific type of cloud environment based on ownership, scale, and access, as well as the cloud's nature and purpose. The location of the servers you are utilizing and who controls them are defined by cloud deployment model. There are four types of cloud deployment models, which are public cloud, private cloud, hybrid cloud, and multi-cloud. Public cloud. The public cloud makes it possible for anybody to access systems and services. The public cloud may be less secure as it is open for everyone. Private cloud. The private cloud deployment model is the exact opposite of the public cloud deployment model. It is an one-on-one environment for a single user or a customer. Hybrid cloud. By bridging the public and private worlds with a layer of proprietary software, hybrid cloud computing gives the best of both worlds. With a hybrid solution, you may host the app in a safe environment while taking advantage of public cloud's cost savings. Multi-cloud. As the name implies, we are talking about employing multiple cloud providers at the same time under this paradigm. It's similar to the hybrid cloud deployment approach, which combines public and private cloud resources. Instead of merging private and public clouds, multi-cloud uses many public clouds.
Let us now look at the application of cloud in finance industry. So the first application is cloud is used for speeding up development and release of products and services. Usually in large organizations with traditional IT systems, developers often face the issue of waiting for resources. It could take several weeks or even months for them to get access to it. However, with the help of cloud infrastructure, developers can access the necessary resources which are required for developing a product, thereby speeding up the release of products and services into the market. The next application is cloud is used for ensuring infrastructure stability. Now, what do I mean by that? Well, as businesses grow, so do their requirements for infrastructure, for reliability, and also for speed of recovery in case of failures. We understand that data loss can result in large financial and reputational loss for a company. So a company cannot take a bet on it. However, it should be able to quickly back up data in the critical times. That is when cloud as a technology is used. The third important application of cloud in finance is deploying AI and big data applications. We should definitely thank cloud because cloud has helped banks, insurance companies, and fintech companies to gain access to the enormous computing power needed to build heavy AI and big data applications. The fourth important application of cloud is that cloud is used for hosting virtual desktops. Well, deploying call centers, customer support services, and back office for temporary or seasonal projects for a company is pretty expensive. But the greatest advantage that comes along a virtual desktop or what we call a cloud workplace is that it is much easier and faster to deploy or remove as needed. So you are, in terms of capital expenditure, saving a lot of your cash by not purchasing expensive equipments. Last but not the least is that cloud could be used for working with user data. Until now, we have learned that cloud infrastructure significantly reduces the cost of storing user data. But still, a very important and big question remains on top of our mind. The question is, how reliable is the protection of personal information about the customers, about the partners, and insurance companies? Well, in this regard, today the financial sector is actively using or introducing the concept called hybrid clouds. So, this hybrid cloud allows the user to separately store their confidential and private data, thereby maintaining the confidential information about your customers, your partners, and also your insurance companies. So these were some of the advantages, or most importantly the applications of cloud technology in finance industry.
Advantages of cloud in finance. Nowadays, it has become essential for companies to convert from capital expenditure to operating expenditure because it leads to a reduction in capital expenditure. Like if there is no capital expenditure is incurred, the investment risk decreases, and it have removed large upfront investment and replaced by a predictable monthly fee. Cloud have made monitoring and analyzing so flexible for employees that they can access company emails, business applications, and CRM tools through their smartphones. And cloud computing very easily scales resources without the requirement of any interventions. The cloud can help finance services organizations to streamline their operations, to enjoy improved efficiency ratios and operating leverages, to retain a high level of efficiency. Cloud have helped serve customers more faster, that is, it makes new products and services easier to develop and launch, like even at a prototype stage in a non cloud based application, it takes more than 1.5 years to develop. But with cloud, we can complete it within 3 months. Cloud, cloud have also helped to forge strong customer relationship. Like for example, when an ING Direct changed its name to Tangerine in 2013, it adopted an entirely new business model. Like with the help of cloud, the cloud assesses customers' feedback more easily, and they delivered services based on that feedback, which helped their business grow.
In this case, we are talking about a company with origins as a government sponsored institution. Today, this company is a fully privatized bank that owns nearly one-fifth of the student debt across the United States, offering more than 500 savings plans and operating across several states. This massive financial institution has annual revenue of $1.6 billion and employs 1,500 people nationwide. The company had made a strategic decision to transition production workload from their own premise data center to public cloud. However, they also needed to maintain a consistent data management where data could flow seamlessly between their own premise and AWS public cloud storage resources.
The first task was to replicate more than 50 TB of production worm data, that is, write once, read many times data, from their NetApp on-premise storage to Amazon Object Storage. They were delighted to see that they could accomplish this quickly and securely using the Net Cloud Shrink automated data synchronization service.
To conclude, as consumers, we all benefit from agility, scalability, and flexibility of cloud computing in finance. There are enormous benefits that can be gained in the cloud, such as banking, insurance, financial services. For the financial industry, we don't have to let capex, data management, regulations, and concerns about data privacy be a barrier to gaining those advantages. As we have seen, cloud can help financial companies of all the sizes get to the cloud and succeed there.